Okay, let's dive right into this. Welcome to today's Explainer, where we're going to unpack a massive strategic secret, one that's been hiding right in plain sight. If you're a small business owner, an entrepreneur, or honestly, even if you're just looking to dial in your side hustle, you've probably wrestled with this exact question. Who, exactly, should I be selling to? Well, to figure that out, we're going to look at one of the oldest trades on the planet, the leather industry. Because it turns out, the way leather buyers and manufacturers operate, it actually holds the ultimate strategic playbook for choosing your own target market. So, here's our agenda for today. We'll cover the $50 versus $500 pricing mystery, define the two core markets, look at materials and quality control, bust the high-volume myth, and finally, help you choose your target market. All right, Section 1, the $50 versus $500 pricing mystery. Let's look at the stark contrast that really drives this whole conversation. Okay, consider this scenario. You've got two leather bags sitting side by side. They're essentially made from the exact same category of raw material, yet one has a price tag of $50, and the other, it's proudly sitting there asking for $500. How does that even happen? I mean, a lot of people immediately jump to the conclusion that it's just the logo stamped on the front, right? They think it's nothing but a ridiculous brand name markup. But, as you'll see today, it's actually about far, far more than just a fancy logo. The real answer to our $50 versus $500 mystery boils down to one fundamental business concept: market segmentation. Basically, this is the act of taking a massive, broad target market, like, say, literally everyone who buys bags, and strategically dividing it up into distinct subsets of consumers. These subsets, they share common needs, priorities, and expectations. And choosing which segment to serve, that changes absolutely everything about how a business is run. Moving on to Section 2, defining the markets, mass versus premium. Let's look at the two distinct segments that dictate how this industry, and very likely yours, operates. Let's start with the mass market. You see this segment every single day in department stores, big retail chains, and fast fashion labels. The objective here is crystal clear and super focused: deliver acceptable quality at the absolute lowest possible cost. That means literally everything is geared toward competitive pricing, churning out high-volume production, maintaining standardized, though, not necessarily perfect, quality, and ensuring really fast replenishment. If a style sells out, boom, the supply chain has to replace it immediately. Now, totally contrast that with the premium market. Think luxury brands, high-end designer labels, and those bespoke heritage leather companies. Here, the customer isn't just buying a bag to lug around their wallet and keys. No, they're buying status, they're buying long-lasting durability, and a carefully crafted experience. Because of that, the entire business model completely shifts. The focus becomes all about securing superior materials, showcasing exceptional craftsmanship, weaving this rich brand storytelling, and offering a real sense of exclusivity.
Section 3, materials and quality control. Let's dive into the anatomy of a segment and really dissect how these markets operate down on the factory floor.
So this divide goes deep, right down to the raw materials. And this brilliantly illustrates the whole concept. Mass market manufacturers, they're looking for lower costs and a really uniform appearance to maximize the production efficiency. So they use what's called corrected grain or split leather. That's essentially the cheaper, lower layers of the hide that are heavily painted over to look uniform. On the flip side, premium buyers demand the tough, natural beauty of full-grain leather. They want those delicate aniline finishes that don't hide natural imperfections. The standards are so completely different that premium buyers will outright reject entire batches of hides that mass-market manufacturers would, frankly, happily use all day long.
And this difference extends right into the quality expectations too. Mass-market buyers prioritize consistency across huge batches. If there's a minor natural defect on a bag, it's usually acceptable because the goal is volume and speed. But premium buyers? No way. They prioritize absolute excellence. They're inspecting grain consistency, hand feel, color depth, the strictness of the stitch quality, the edge finishing. I mean, a minor defect that is totally fine in mass production will get an entire batch thrown out in the premium tier. If you're a supplier in the premium space, your quality controls have to be incredibly tight.
All right, Section 4, the high-volume myth. Let's break down the actual profitability of each of these paths.
Now, what's really interesting about this slide is how it challenges a super common small business assumption, the idea that high volume automatically equals high profit. It's just not always true. Let's look at the economic trade-offs side by side. So, the mass market gives you large orders and stable demand. Great, right? But the challenge? You face intense, relentless price pressure, lower margins, and just constant cost negotiations.
The premium market, meanwhile, offers the advantage of higher margins, way stronger client relationships, and better value perception. But the trade-off there is you're dealing with much smaller volumes, incredibly complex quality requirements, and significantly longer development cycles. Basically, every advantage comes with its own specific headache.
But here's a fascinating insider secret from our source material that I think every business owner really needs to hear. You don't necessarily have to pick just one path forever. Actually, scratch that. The most successful leather manufacturers often maintain a balanced portfolio. They'll use mass market contracts to keep the factory lights on, pay the overhead, and maintain that stable cash flow. Then, simultaneously, they take on premium contracts to boost their profit margins and build up their industry prestige. It's a really smart, highly strategic mix.
Section 5. Choosing your target market. Let's pivot to the small business playbook and see what this means for you.
Okay, it is time for a self-audit. If you want to compete in the mass market, and it doesn't matter if you make leather bags, software, or baked goods, you really have to ask yourself if you genuinely have the infrastructural efficiency that's required. Going after the mass market means you need large production capacity. It requires ruthlessly strong cost control systems where you are literally tracking every single penny. And it requires highly efficient supply chain management. If your business isn't built for scale and speed, the mass market is going to eat your margins alive.
Conversely, if you want to position your business in the premium tier, you're looking at a totally different checklist. Do you have exceptional craftsmanship? Do you have ironclad quality control, a highly skilled workforce? And importantly, can you handle complex developments that just take a long time to complete? Interestingly, our source points out that a lot of factories actually start out in the mass market just to build up their operational baseline. Then they gradually scale up the value chain toward premium customers as their workforce's skills grow.
So the crucial point here is perfectly summarized by this quote from our source material. Mass market products compete on efficiency. Premium products compete on value. One segment isn't inherently better or more noble than the other. They're just fundamentally different games, and they play by fundamentally different rules. The absolute key to your long-term success is really just aligning your own operational capabilities with the specific expectations of the customers you're choosing to target.
Which brings us to the ultimate question you have to answer today. I want you to take a hard look at your current operations, your team, your passions. Which segment truly aligns with your capabilities right now? And which one offers the greatest opportunity for the future of your business? Ask yourself, are you built for efficiency or are you built for value? Think on that. Apply this playbook to your own strategy, and we'll see you in the next explainer.